What's up, BiggerPockets? Chris Lopez here, and I am starting a brand new series on BiggerPockets called the Portfolio Analysis Show. Everyone out there talks about how to buy a property, how to BRRRR, how to do this, which is all phenomenal information. But you know what no one else is talking about? How do you reevaluate your current portfolio, and what do you do with your portfolio? People sit down with a financial advisor every single year to rebalance their stocks and bonds and reinvest things. But who does that for real estate? No one. My job is to make sure you know what to do with those properties you bought. How to say, hey, I bought these properties 5 years ago, 10 years ago. What do I do with them today? The property has changed, the market has changed, you have changed. And also, you're seeing a lot of equity as well. And I'm on a mission to help you understand what's going through your portfolio and how to take your current portfolio and make it turn into reality to achieve your financial freedom goals. What's up, BiggerPockets? Chris Lopez here, and I am on a mission to take all this equity and turn it into achieving your financial freedom goals, whether it's more cash flow or more growth or a hybrid. But before we get into all of that, let's say you take all the advice from this video and get mega wealthy. Do you even know what to do with the money? One day, you're a struggling investor managing the day-to-day hassles of property management. Then next, bam, you're earning monthly distributions without lifting a finger. And that's exactly what BAM Capital does. With over $1 billion in transactions, BAM Capital is the multifamily syndication that lets investors step away from the tenants and the toilets and into target returns of 15 to 20%. So if you're an accredited investor who wants cash flow stability, long-term appreciation, and accelerated tax benefits with an experienced sponsor who has averaged returns over 35% IRR, then head to bamcapital.com/biggerpockets. Again, that's bamcapital.com/biggerpockets to invest today. Most people do not realize the gold mine of equity that they are sitting on. We've had unprecedented appreciation. How do you take that appreciation, that equity, to make sure it meets your goals? That is what this show is about, our new portfolio analysis show, where I go through a 5-step process that I've done with over 1,000 investors, and I break down someone's portfolio and their goals, and we brainstorm options on what they can do with their equity. I am fascinated with this concept of return on equity, or ROE, and no one is talking about it. And over the last couple of years, my team has started calling me Mr. ROE. So from now on, I am Mr. ROE because there's a massive opportunity cost of all the equity that you have in your properties. And if you want more details on the step-by-steps of what ROE is, make sure you check out the Steal My Plan episode on BiggerPockets. But for now, let's jump into our first guest. So today I have Mr. Jeff White in my studio, and you may know Jeff from a couple other shows he's done with me on BiggerPockets, namely the House Hackers Show. Jeff's story is epic. He is literally my poster child for when I say, hey, here's a house hacker success. We show a picture of Jeff. So about 6 years ago, Jeff started his house hacking journey. He's house hacked every year or quicker, and now has compiled a portfolio of almost 10 properties, and he's on the cusp of leaving his job to go out there and achieve his financial freedom. So we're gonna sit down today, go through Jeff's portfolio with our 5-step plan, and put a plan together for Jeff to use his equity and achieve his financial freedom and kiss his W-2 job goodbye. All right, so let's jump into the details here. So I got Jeff next to me in the studio, and we're gonna go into step 1 of our 5-step process. So this is a step that so many people miss, and it sounds very simple, but they overlook it. It's review and realign your goals. Now, most real estate investors are smart enough to go out there and start buying properties. I need to buy properties, I need to buy properties, I need to buy properties, but we don't have like a clear end destination. And all real estate is a vehicle to help you get where you need to go. And when Jeff started buying his properties years ago, the market was different, his life was different, his net worth was different. So now let's come back and actually, hey, take a step back, take a breath of fresh air, and talk about where Jeff wants to go. So Jeff, let's talk about where you're at currently. Roughly, how many properties do you have, and what are your current goals?
8 properties, exactly, and total cash flow, while living for free. And house hack number 7 is over $10,000 a month.
All right, so 8 properties, living for free, and cash flowing $10,000 a month. So a 6-figure goal right there, which for most people is a financial freedom goal.
Yeah.
Congrats, Jeff.
Thank you.
All right, so you're sitting here in a great position. What is your plan? Like, you have built a great portfolio. You've recently gotten married. I know you got all sorts of plans changing. Where do you want to go from here?
Yeah. So basically built this up. It's very much slow and steady. And I really haven't, I finally seen the results of all those years of efforts. It wasn't a quick thing. It was very slow and steady. And where I want to take it basically is to walk away from my W-2. And in the background, I've been slowly building this realtor business as well, consulting business. And I want to step into realtor consultant for house hackers and whatnot and build up that business as well, because I have my rental income to support me. So even whether I close one deal as a realtor or 0 or 100 doesn't really matter, because I could choose the financial freedom path I want to choose.
And I assume you can live off of $10,000 a month?
Yeah, that's beyond my means of living. So it's very awesome for my wife and I.
Well, again, congrats, buddy.
Thanks, sir.
All right, so let's look here. Let's recap this. So Jeff currently has a really high-paying W-2 job. He has a 6-figure cash flowing rental business. Plus, he's an investor-friendly realtor. So right now he has 3 incomes. And 2 of those, the rental business and the realtor business, are his side hustle. And now he's turning those into his full-time hustle and also go out there and generate wealth. So do you have any specific goals or cash flow that you're looking at, or is the transition the main goal right now?
I would say, so the cash flow goal was more 3 times the cost of living. So right now I'm spending about, with my wife, 3 to 4K per month. And like, we have, enjoy whatever you want, go out to whatever we want to do, and travel, entertainment, anything we want. So obviously some people live on less, but that's what it's around 3 to 4K a month. I calculated it. And so I want about 3 times that number. So we're pretty much there at that 10K per month mark.
Okay. So roughly you're there.
Yeah.
Awesome. All right. So that's your goals.
Yep.
And then I'd say in the next 6 months, next 6 to 12 months, what specifically is your goal?
Yeah. So basically walk away from my W-2 but some people, when they walk away, they like just say, okay, I'm done. I'm just going to play video games, or, take it easy for 6 months. I want to step into something else I'm really passionate about. And I found out being a realtor, like specifically specializing in house hacking type of realtor, is an amazing thing, because you're like giving back to changing someone else's financial lives versus just myself. And that's very meaningful versus just crunching numbers all day at my day job.
Yeah. I love it. All right. So that is step 1. So again, we always want to come back and review and realign goals. And if you own properties, you have to do this yourself right now, because your life has changed and the market has changed, just like Jeff's here. So let's jump into step number 2, which is a global overview of your portfolio. In this case, this is a global overview of Jeff's portfolio here. Now, there are 2 things that I have learned, 2 huge lessons I've learned from 1,000+ portfolio analysis sessions with clients and investors. Number 1 is that no one looks at the global portfolio. It's usually isolated in property 1, property 2, property 3. You don't get a nice monthly statement like your 401k or your financial software tells you, right? The second thing is everyone's stuck in the past. Real estate is a slow moving beast, and it's not real-time data like stocks and crypto and all this other stuff. So when people buy a property, they're often stuck, oh, I bought this property for X amount, and I was at a 6% cap rate or 8% cash on cash return. And great, you're anchored in 5 years ago. Now that's part of what we need to talk about, but as a small part of the conversation, what matters is not then, but today. So as we go through the global review, those are 2 things we're looking at. Hey, let's get an accurate snapshot and also make sure we have current data in terms of values, loans, are your rents up to date, all this information. So Jeff, you have 8 properties here. Give us the 30-second summary on how you achieved 8 properties with almost no money out of pocket.
Yeah, so house hacking, really, that's the simple answer.
Like I said, my poster child.
Buying, but renting, like doing over years, not just doing 1 or 2. I've done it 7 times with my now wife, and she's been with me this whole time. And that's pretty much the model. It's just buy a house, live in it with a low down payment, and then rinse and repeat. So house hack 1, 2, 3, 4, 5, 6, 7. And while we're doing it, living for free, that was number 1 goal, and cash flowing as well. And by doing that, you accumulate a lot of properties without having to save up 20% down. And that's the model we've chosen to pursue. And that's how I was able to scale so quickly without having to save up 20% down for every single investment property.
Great. So Jeff has 2 secrets here. Number 1, house hack. Number 2, find an amazing partner to go along with you, right? So obviously 2 major things that Jeff has done with his portfolio. All right, so you accomplished this, and it's been since what, 2017 you started?
Yep, 17.
Going from 0 to 5% down payment for these properties. And, we're here in the Denver market, and we just had an amazing appreciation party. So today, what roughly is like your total valuation and total equity like in your portfolio?
Yeah, total valuations over $5 million and total equities easily just conservative over $1 million.
Listen to this. He said a $5 million valuation and a $1 million equity. He is now a real estate millionaire. And actually, I think, Jeff, when you and I sat down last year to go through this, we went through this step 2 here. And I think it was that moment you were like, holy smokes, man, I'm a millionaire. Like, it was such an amazing reaction because you were a real estate millionaire based off your 7 figures plus of equity in your properties.
Yeah, without realizing it.
Yeah, and how much money did you put down total on that, do you think?
Yeah, I actually calculated one day. It was total down payments was probably, for all those properties, 150, 170K.
All right, so let's just round up. Let's say $200,000, right? Just round up for that. So $200,000 or less to go out there and get 8 properties are now worth over $5 million, and you're a real estate millionaire.
Yeah.
Great. And that's the power of house hacking and staying the course. All right, so now we have a good picture of Jeff's portfolio, 8 properties. We know he's a real estate millionaire. He's got $5 million in valuation, and he wants to transition out to his job. So let's jump into step number 3, which is analyzing each individual asset or house that Jeff owns. Now, we're going with the global review, and now we're going to do each asset to analyze it, see how that's performing, and also get Jeff's feelings and operational aspect on the real. Just, hey, how's that property doing as a whole? Now, we don't have time to cover all 8 properties. We're actually going to dive into 1 property so you can see the process we go through. And actually, this is the very same property that Jeff walked with us on our House Hackers show, which is an amazing one. So a link to that in the video. Go watch it for all the specifics. Now we're going to talk about the finances of it. So Jeff, this is a really strong property. You bought what year?
2020.
2020, you bought for $495.
Correct.
And now it's worth about $665, $670.
Yep.
So high level, it's gone up a lot in value. He's had some debt pay down, and now he's sitting on $200,000 and change in equity. And currently it's cash flowing about $20,000 a year or about $1,500 a month. So here's what happens for most people. They hear, wow, $20,000 a year in cash flow. That's all people hear, right?
Yep. Keep it simple.
So we're saying, hey, how's the numbers on this property? Now here's the real important number. This is the number that every single real estate investor will run into, no matter how well you buy the property, whether it's a house hack or 0% down or an amazing BRRRR property. Let's talk about return on equity. And return on equity is you take that $200,000 and change, because that's now how much money you have in that property, and you take the 4 ways you make money in real estate: appreciation, debt pay down, cash flow, and tax benefits, and figure out, hey, all that, what am I making a year on here? And we calculated this. Jeff is making approximately 8% and change on there. So an 8% return on equity. Now, Jeff, you hear that.
Yeah.
What are your thoughts? Because you're a finance guy.
Yeah. I mean, that's not bad, but I thought it would be much higher, to be honest with you. And that's kind of illustrating how it's something to reevaluate on really each property, like whole portfolio, because you might find those opportunities. And I know that's what we're here today for, is to find those potential opportunities to basically find a way to do better than that 8%.
Exactly. Yeah. And so this is something like, there's no right or wrong. Like I said, so many people get focused on their past data and the cash flow number. And that's only a small part of the picture. Return on equity, in my mind, is the current accurate snapshot you need to look into, because if you're making 8 to 9%, are there other investments out there that make 8 to 10%? The stock market does, right? For example. And so I'm not giving advice any here, but hey, what can I do with this equity? What can I do with the money here? That's what you have to look at. And from what I've learned from many of my mentors who are way more successful and have a lot higher net worth than I do, is like, oh, if I'm making 8% on that money, I can move that somewhere else. So I want to make double digits. Otherwise, I'll just park it in the stock market. I'll park it somewhere else, because in real estate, you have tenants. you have toilets, you have liabilities, and is an 8% return on that money worth it to you?
Yeah.
Is it, Jeff?
Yeah, I mean, so
Or
far,
TBD?
I guess it is as of today. So
Yeah.
today, yes. Tomorrow, TBD.
Yeah. And you understand this return equity concept. What happens here is when Jeff bought the property years ago as a house hack, because he had such little equity in there, he was in like triple digit return equity, like 100% plus. But as equity grows, that return equity actually starts going down and down and down. And then it's where you want to identify, hey, am I good with these returns? Again, no right or wrong, or do I want to reposition this to meet my goals? So that really brings us leading into step 4 of the process here, which is talking about opportunity cost, or saying, what if? What could I do here with this property? So Jeff, let's play the what if game. Mm-hmm. What if? What can you do with this property or the equity? In your world, in your life, what's on the table right now?
Yeah, 1031 exchange into a bigger, better property that has a similar 30-year debt structure, but maybe cash flows even more because it's moving over a big chunk of equity. Selling, cashing out, that's also an option, and just taking that chunk of money and deploying that in some lower risk where I get the treasury bills with 4%, something like that. I could, if I just want to be super safe, conservative, like that, then I have no more toilets and tenants anymore. I could also 1031 it into a couple properties. Yeah. There's a lot of great options for me.
Great. Yeah. So this brings us into step 5 of the process. And this is creating or updating your portfolio architecture action plan. So after you've gone through and done your goals, looked at your global portfolio, looked at individual assets, and then reviewed them by the what if, what could I do on here? Now it's time to put together an action plan. And this is an immediate action plan, a medium term, and a long-term action plan as well. Jeff's focus this year is obviously transitioning from his job into a full-time landlord and also into really taking the full-time career of being an investor-friendly realtor. Mm-hmm. So Jeff, what's your action plan right now?
Action plan basically is to hold and just enjoy the stability of basically my properties, the cash flow, and not make a move just yet.
Yeah. And so I think that is wonderful advice. And actually for a lot of times, if you're not sure what to do, that's the default advice. Go there, do nothing, maintain, and then reevaluate. Because Jeff has a lot of changes coming up. He's changing jobs. He's new married. The market is a little wonky right now. So it's like, great. He has busted his butt the last 6 or 7 years to accumulate an amazing portfolio. And he's been hustling. And I was like, hey, I'm gonna kind of just let this maintain. And I'm gonna focus on this part of my life over here, which is an amazing thing to do. So, but let's talk about your portfolio architecture plan. And by the way, thank you, David Green, for the phrase. I love it. So we're going to start using that a lot more. And I want to sit down and make sure everyone knows what their own architecture plan is, because this is a huge missing gap for people. Anyone that can go out there and have success as a real estate professional or real estate investor, they're into goal settings. But I find that almost no one goes out there and sets goals or what they're going to do with their current portfolio. And so in order to do this, you have to come through a methodical process to review your portfolio. So here's my recommendations. Everyone out there watching this, once a year, sit down and do your 5-step portfolio analysis plan. I relate to you going out there and doing an annual plan with your financial planner, but there are no real estate financial planners. So you got to do it yourself. So you come in here and do it every single year and figure out what your plan is through those 5 steps. Then you go out there and create your action plan. For example, my action plan right now is I'm holding some, I'm selling some, I'm moving things around, but I'm in a different phase than Jeff. And this is where I want to really focus on what's right for you, not what you hear on the BiggerPockets podcast or a YouTube comment or something else. You get those ideas, but you have to take it all together and use that 3-factor alignment we talked about on one of the House Hackers shows and figure out, hey, where's that sweet spot for you? And the portfolio architecture plan is that guidance, is that roadmap that says, hey, here's that sweet spot. Let's get you there. So plan this year is just sit here on this property because, hey, it cash flows. It's really well. It still gives you a good return overall. But then, hey, we can come back in 6 months or 12 months when the market has changed, you've successfully transitioned, and say, hey, let's come back and redo this plan.
Yep.
And then, do you have any idea, maybe in a year, would you sell this and do a 1031? Is that kind of what you think a little bit longer term down the road?
Yeah, definitely. So I'm completely open to, I'm not buy and hold forever type. Like I'm open to trading up, redeploying, recycling capital, redeploying capital, where what's the best use of it? What could I get the highest? I like cash on cash return. What could give me the highest cash on cash return? It might be a single family, duplex, 8 unit, that's what I want.
So you're going to bring cash on cash return here to Mr. ROE's table, huh? Man, I'm going to have to convert you, Jeff. I got to convert you, man. We got some work to do.
Slowly.
YouTube, drop some comments here. Help me convert Jeff here. Or are you a cash on cash guy? Let's have some debates. So Mr. ROE is signing off here. What I want you to do is tell me what you're doing with your equity in the comments below. What is your return equity? Or are you with Mr. ROE? Or Mr. Cash on Cash over here? What's your answer? Again, there's no right or wrong. Let's have a friendly debate, and we know your answer in the comments below. I'll see you next time.